I like to work. I like to work, and I love what we do. I love
Yeah.
how we help business owners sell their business, defer all the tax, because you get hammered in states like California. A business owner can lose 40% in the transaction when he goes to exit.
Wow.
So it's state and federal combined. Plus, if your CPA is taking a bunch of depreciation, now you have to recover accelerated depreciation in addition to gains. And we're constantly having people go to their CPA and say, no, no, no. He said I'm only going to owe 22.7 or whatever. Well, that's
Mm-hmm.
the federal rate. What about the state? What about the recovery? Did he do a specimen return and actually run the math out? Well, no, no. He said we'll take care of it in April. And then we start getting these phone calls every year in usually February. We get
Yeah.
about a dozen of them. Hey, remember me from last August? I decided to not do the installment sale trust after talking to my CPA. My taxes are twice what he said they were going to be, you
Mm.
know? And, can you help me? Well, when did you close on the business or the real estate or whatever? Well, we closed in September. Can't help you. Well, you're
Yeah.
done. It's past December 31st. And we get dozens of those calls where the CPA was wrong or just didn't run the math or just spit
Wait, wait.
something out there.
So this brings up a really good question.
Yeah.
You can go installment sale trust after the sale?
No,
Oh, yeah.
no.
So it
Now,
has to be.
after the sale, there are about a dozen arrows we have in our quiver to reduce the tax hit. The installment sale trust defers it while we eliminate it later.
Yeah.
So we need that deferral to do that. And folks that are listening in here, keep your video off and mute yourself so we don't get a bunch of background noise. But we defer it and then chip away at it and show you how to do that. It's a tremendous plan. It eliminates the need for a 1031. Business owners can't 1031, or if you're selling other assets. The strategies from Ernst & Young back in the 1970s, they did it themselves so their own partners could defer the tax on their partnership. Then they started using it with their clients. And it's done like 5,000 times a year. It's Bain Capital does it in mergers and acquisition deals for the people that are exiting. Mitt Romney, you remember the big deal where he didn't pay tax on $100 million? Loopholes for the rich, the media was saying when he was running for president. No, the money landed in the trust account and he pays tax on the income as he receives it, but he does some tax planning to reduce that tax hit. So
Mm.
I can, if you get a hold of me before December 31st of the same year of the transaction,
Mm.
we can cut your taxes by 2/3 every year.
Wow.
50% at a minimum. Just every year, call me in November, whatever you think your tax hit's going to be in April, I can reduce that by 50%, maybe 2/3.
Wow.
But using the installment sale trust, there's a bunch of other methods like charitable trust and complex spendthrift trust and all these other things that are out there. None of them are as simple and as clean as an installment sale trust.
Mm-hmm.
It's the most elegant, simple method of doing it. Do we do the other things? Yes, we do those secondarily because they're more expensive and they're highly audited by the IRS.
Uh,
But see, since we have a fiduciary trustee in charge of these things, the IRS doesn't bother with it. It's like, when does the IRS audit your IRA account or your 401k account, whatever,
they
right?
don't.
Well,
Yeah.
they can, especially if it's self-directed, but they
Uh,
don't because a qualified account has to be hosted with a third-party administrator trustee,
mm-hmm.
and they report quarterly. So the IRS doesn't trust you to do the reporting. So because we have this third party, this installment sale trust trustee, the IRS isn't worried about it because there's a third party, right? But it gives you asset protection. It gives you safety, security. If we make a mistake, there's insurance. If you make a mistake, it's on you, right?
Yeah.
So when you do the other methods, it's on you.
Yeah.
IRS shows up. You better know what you're talking about and answer the questions correctly. You're going to have problems.
Yeah.
So in 20 years of me doing these, the program was handed to me by two tax attorneys from Ernst & Young.
Mm.
And I used it for a friend of mine in 2004 when I was a defense contractor. Prior to that, I built and sold a bunch of businesses, turned around several, sold Western Office products to Office Plus. So I did a bunch of that in the 90s. And I bought my advisor's practice, but all my friends that I'm talking to need other planning than manage my IRA, right? So I immediately got deeply into tax planning, tax strategies. We can make every rate of return your current advisor's making, probably beat them consistently, but we're going to cut your taxes in half every year.
Mm-hmm.
maybe more. That's money in your pocket immediately. We get deep into that kind of planning for you. So it's a very different approach to financial planning. Most advisors don't get into this because their broker doesn't allow it, because he doesn't want them to get audited or give bad advice or something, right? We are our own broker. We're registered with the SEC. So we use brokerage houses, but they provide a service to us. We can fire them and move tomorrow. We're not beholden to anybody but our client and the regulators, right? So it frees us up. That's why we don't sound like the average financial advisor.
Yeah.
You want to talk futures, options, ETF baskets, and things like that? You know, I went to school for futures and options. So yeah, we manage that stuff. So yes, but let's cut your taxes in half. Let's let you sell that apartment building and buy the next one at a time and a date of your choosing without giving up income, without the tax hit.
Yeah.
Now, so we also set up a 1031 accommodation service. And you and I have talked about that.
Yeah.
Because we got tired of fighting with the other services out there when their attorneys are just wrong. Yeah. And then you give them the tax evidence that they're wrong, and well, we're not changing our opinion.
Yeah.
What? So we set up.
Sometimes people think it's too good to be true.
When you're handing them the due diligence packet, and their attorney still says, "Well, we're just not going to do it."
Look, so I experienced this on the listing side. So we do 10 times more marketing, and we do 10 times more marketing than 90% of real estate agents out there. And even of the other 9%, we do twice as much marketing. The aspect here is, nobody does all the marketing we do. And it's very smart. It uses algorithms inside of the, Zillow, Realtor.com, Homes.com, all these different websites. If you give it the content that they want, that they think the consumer wants, they will. It's almost like, you ever get, if you're ever on social media, you know how like negative posts or very hot topic posts tend to get more engagement, and then social media just like bounces it around to more people.
Feeds
it's like that. And so what it is during the pandemic, before the pandemic, Zillow was the only one that hosted virtual tours in any capacity. And then during the pandemic, everybody was scrambling because nobody could walk inside a house without a pre-approval. And they found that people weren't, accustomed to that. So, so everybody scrambled to get virtual tours on these, on their websites. And we were already ahead of the curve. I'd already been doing virtual tours for years. And, when I tell people 99.9% of realtors don't do all of the different marketing content that features on the websites to make your home get 10, 20,000 views instead of 1 or 2,000 views. The number one question I get is, why don't the other people do? Why doesn't everybody do it? Because they're lazy. They don't want to spend the money.
It's that way in every profession. We've all heard the 80-20 rule, but when it comes to professionals like you and I, it's the 95-5 rule.
Yeah.
It really is. It's in my industry as well. And you have the 95 that are just copycatting somebody, but they're not even doing it half-assed, right?
Doing it right, yeah.
And you've only got the 5%. One of the brokerage houses that we use, if you're not in the top 5% of the 1%, they won't sign you.
Wow.
You have to go back to Topeka, Kansas, and spend 3 days with them to decide if they want you.
Wow.
Because the amount of service and the level of everything they provide, they're not wasting it on somebody who isn't going to make use of it.
Yeah.
And your 3-day interview, it's usually the other way around, right?
Yeah.
No, they're like, no, we want to see. But they also produce, last year, $46 billion in new revenue came into that one firm. So that's it in the industry. It's number one. And nobody outside of our industry has heard of them. They don't advertise. They provide services to advisors, but only elite advisors. It's the same way in your industry. There are commercial realtor shops that do tremendous numbers that people outside the industry don't know who they are.
Yeah.
Because folks like you're focused on your client. You're focused on this. Yeah. It's that way in every industry. So let me go into this a little bit. We actually decided to start our own 1031 accommodation service just because out of frustration. And my guy said, that's got to be expensive and difficult. I go, have you met some of these people? It can't be that hard. It's kind of a cynical way of looking at it. But you know something? In 4 months, we were completely approved by the IRS to include the Installment Sale Trust as part of our program. Only took 4 months because we have a great relationship with the IRS. We meet with them here in Laguna Niguel, near where our California offices are, and have just a great relationship because they're not going away. You'd better understand what they want and comply with it. So they're not bad. They're really not. The people there are very helpful. I find them to be very helpful. So it's a 1031 with a safety net, but you can go directly to the safety net. So in your case, apartment owners want to exit, but they don't want to give up the income. They don't want to pay the tax. They don't want to buy something else like a DST or something else where they lose control, right?
Well, I mean, I would say the number one thing that I've run into recently are because of the loans, the interest rates, the prices have, skyrocketed in excess of the rents on some of these buildings. It's really hard to find a replacement building that makes them as much or more at anywhere close to the same price. Like that's because your property taxes are going to go up when you do the 1031 exchange,
Yeah.
and so it's going to eat into your profit. Because it's really about your cash flow. Like, why would you sell this property if you're not going to cash flow, right?
But you know something, the installment sale trust, if you've owned a property 10 years or more and you've taken all that depreciation and it's had appreciation,
yeah,
the trust is going to generate equal income and equal appreciation to the property.
And that's what I love about the trust. Like, I plan to do the trust one day. I've started my own real estate portfolio, but I'm helping a doctor buy a triplex in Venice. She's going to live in the top one and then rent out the bottom two.
Yeah.
But her mom, was complaining to me. She was at the inspection. She was venting about how there's nothing out there that would make her as much money as the building she has now. But she wants to get out of it. She's sick and tired of, being a landlord. She wants to buy something new. And anyway, long story short, I shared with her, hey, there's a way for you to sell, defer your taxes, and instead of the 1031 exchange, walk out your cost basis. And she, unfortunately, she's in India. I know we had to push it because of the fires pushing all the soccer in my schedule. We pushed it to this weekend, and here we are with another soccer. But I'm going to send her the video of the recap of this. But she absolutely, wants to see this because she doesn't want to be a landlord unless it's a newer building. She's sick of the headaches.
We're constantly getting
buildings.
People that come into the trust that say, Kevin, keep all that money ready to go because I'm looking for another property because they made all their money in real estate, right? Then they start getting the quarterly income because the trust pays quarterly income to you, and there's guarantees, and we'll get into all that at another time. When you're getting equal or better income, no tenants or toilets, and you're at a certain stage in life, and you're visiting the grandkids and finally taking your wife. By the way, at the top of the Eiffel Tower, there's this little cupboard up there, a little closet. There's a guy in there. It's 20 euros for 2 little glasses or 2 swallows of champagne, and that's at the very, very top. And you can take your wife to the very, very top, do it right at sunset, and it's crowded. You got to be there, something you got to do. So you start ticking your bucket list off, or you're in Venice taking the boats to the restaurant for dinner. When you have time to do those things now, and the income's coming in quarterly, at some point in life, it's kind of hard to go back to tenants and toilets.
Yeah.
But the trust gets a step up in basis, just like the real estate, to your heirs.
Yeah.
Now, if you find that property that you really want, you go from the trust back to Q Exchange and then to the property.
Yeah.
So you can go from 1031 to the trust, wait as long as you like, enjoy the income, enjoy the appreciation in the trust, because it appreciates. I need to emphasize that. The safety. If you find what you really want to buy, you find that Dallas suburbs or Nashville or something you really want to own. It's out of California usually, right?
Yeah.
You notify us, we go from the trust back to the exchange accommodator to that property. So it's an excellent holding position. In fact, once you learn how to do this, you'll never 1031 again. Because in the case of going from the trust to real estate without going through the 1031, the real estate becomes a fresh purchase. You're not carrying over a low basis. You get to redepreciate $1 all over again. Way better option than carrying over the low basis. So there's using Q Exchange, using the IST opens up all kinds of options and eliminates a series of restrictions moving between properties. Okay. A little bit about who our team is here. Excuse me. Michael Berwick, our tax attorney, taught tax law at Harvard for 4 years. Okay. He taught continuing education to the IRS tax attorneys. He is the foremost expert on this topic. So if your attorney or CPA wants to argue with him, we have an 8-hour class they need to take before they're qualified to even have a debate about it. By the way, when they take the 8-hour class, they just realize we know what we're doing. Okay. It's completely correct. Craig Redler, our trustee. He is an internationally renowned trustee, ran the Cook Island Trust Program for 9 years. He run St. Kitts and Nevis trust programs. He gets paid $10,000 to show up, give a 2-hour lecture, plus all expenses paid in Lisbon and Davos and other places internationally. He travels 4 times a year doing that or more. He is an expert in trust. Mark Nathanson, senior partner at a CPA firm in St. Louis. He does all the trust administration. By the way, all this advice, to include our accredited investment fiduciary, Christian Ramsey, all of these people are included for a flat fee in the trust. So it's all included. And that's just a portion of our team. The companies we have serving you, we have the Exchange Accommodator, financial planning, securities. We have our own SEC registered securities firm, QRIA. We have a hedge fund, a Q Financial Consultancy Trust is for international clients. You see, if you're not a U.S. citizen, you can't do 1031 and stuff like that. So we manage those foreign clients, providing this installment sale trust as a method for them to defer the tax to the next investment. By the way, you can go from business to real estate to other income portfolios back to real estate. You can use the trust to bounce between investments you would not be able to move between. These are just a few of the companies involved. These here on the left, CB Administrative Services and IST Admin Services, are fiduciary corporate trustees. Okay. City National Bank's where we host all of our trust accounts. We love City National Bank. Great relations with them. Fees are low, service is high. They have an app that the client has on their phone where the client logs in and has to approve anything we do. All right, the client has to approve anything or we can't do anything. You go on vacation, you're outside, you can't log in from outside the US. You can't use a VPN. They want to know where you are for security reasons, right? You go on vacation without approving your own quarterly payment, which you have to approve your own quarterlies. You got to wait till you get back. So you better approve that before you leave. We can enter those in up to 90 days in advance, by the way, and then you approve them, and then on the 90th day or whenever it's scheduled, it goes out. So we have ways of handling that. These are just a few of the financial firms, over 40 firms that we use as investments inside the trust. And that's just a small sampling. So everything you see here has reviewed us personally, professionally, our program, our documents. The amount of due diligence that is done on us and our program is tremendous. 3,800 transactions in 20 years. That's 3,800 CPAs and attorneys doing due diligence on us to approve what it is we're doing for their client. Tremendous level of due diligence. So if you run into a professional that disagrees with us, they just need to come to our 8-hour class and get brought up to speed. All right. A traditional like-kind exchange. You bought a property for $500, you later sell it for $900. You need to go through a 1031 or something, or you're going to have to pay tax on the 400K. All right. So it requires a purchase of a similar property. You have to adhere to a whole series of IRS rules and timelines. But going through the 1031 process through an exchange accommodator gives you're required to use an IRS approved company to do this, right? Which we are. We have an IRS approved company. But there's a lot to adhere to. Now, if you do a simultaneous same day exchange, which you can do, you don't get the safety net. You don't get the installment sale. If your exchange fails, you get to the 45th day, 180th day, and you haven't completed the timelines, you now owe the tax. By the way, I want to note here, did you know 60% of 1031 exchanges fail or partially fail? Partially fails when you buy another property, you close on it, but the numbers didn't line up. The ratios of financing and all that didn't line up, or you had some mortgage over basis that didn't get handled correctly. So 60%, 6 out of 10 1031 exchanges owe some or all the tax. Yeah, so you can do a 1031 and still get a big tax bill. All right, and you're talking $5 million apartment buildings. That could be a significant tax bill, even though you did a 1031.
Hey Kevin, I got to jump.
I understand.
But yeah, I sent you some stats about myself. Something I need to put on there in the last 5. I'm a real estate agent. We're in the top 1% in the country, and that is by volume. I'm number 86 in Los Angeles. So I run a small team based out of Manhattan Beach. And I've sold in the last 5 years $146 million worth of real estate. So give you an example of what we do. Currently, we have listed $15 million. So,
well, the best thing about you is clients do business with you more than once.
no, I do, and I mean
that says a lot, right?
I would say actually that one of the best things. I studied economics at UC San Diego. It's the best. It's the 5th best economic school in the country, and the reality about that is that. And I worked at Edward Jones after. I'm all about paying less taxes. I'm all about, I've actually met with, multi-million dollar sellers, and they didn't realize, that they were going to take, they didn't realize what their actual tax liability was going to look like. And, I showed up and said, do you know how much taxes you're going to pay here? And they're like, no. Our accountant said like 15% plus. Well, yeah, no. You have a $2 million property. What'd you buy it for? Oh, 200,000. And this was actually in Hermosa Beach, $2.3 million property, and they bought it for 175,000. And they didn't know anything on it. But I said, look, you're gonna do 20% to the IRS. Then you have the ACA, it's like 3.8%. Then
well, no, if they're in California, state and federal combined, they're at 36 on the gain.
No, I know. And then the 14.2 or 14.7, I forget, I don't have the number in front of me, but the 14% of franchise tax board, because even after your exemption, your capital gains is still, $1.5 million.
Well, they got to fund that train to nowhere in the Central Valley and some other stuff, right?
So anyway, but yeah,
Okay.
no, financial background and a construction background, so I helped there too. I used to do underground utilities, but I'll let you run, and then I'll see the video, and then we'll catch up for another one.
I look forward to it. Thanks.
All right, thank you.
All right. All right. So a simultaneous exchange would be a same day exchange, simultaneous closings. And you don't get the safety net on that. And you don't get the time to plan ahead for that. We do those. We do those with Q Exchange. It's q-1031.com. But you don't get the safety net. Reverse exchanges do not get a safety net. And that's where you buy the property you're going to in advance. Then you sell the property and the accommodator moves the money to the other. Okay, it's a reverse exchange. We can do those, but you also don't get the safety net, and you could have a tax hit because the numbers don't line up. And that happens 60% of the time. Some or all is taxed in an exchange. But if you do a delayed, deferred exchange, you have 45 days to identify, 180 days to close, but you have the safety net. You don't have to force yourself to buy something that you don't truly want, something you would not have chosen had you had more time to go shopping and negotiate. So the installment sale trust both gives you the safety net, or you can fall back to the installment sale trust, take a break for a while, wait for interest rates and values, property values to settle out, and then go shopping, which is a much wiser position, much wiser position. So let me tell you how this works. It's not complicated. You sell your asset, enter into escrow. It goes through a standard escrow. We establish the trust. There's no advance payment required for any of this. And at close of escrow, the funds simply need to go from the escrow directly to the trust account. You see, at close of escrow, the money's got to go somewhere. Escrow either sends it to you, sends it to a 1031 accommodator, or sends it to the trust. If it sends it to the accommodator or the trust, you're tax deferred. If it goes to the accommodator and you can't find what you want in 45 days and close in 180, it falls back into the trust that we've created for you. All right? Or you can just go directly to the trust, enjoy the income, which will be equal to your net rents or better. All right? Enjoy the income while you're shopping. All right? From the trust, you can then purchase multiple other properties through the trust, making the next purchase a fresh purchase, which means you get to redepreciate $1 all over again. It's a more efficient way to move between assets. Simply at close of escrow, the proceeds go directly to the trust. The trustee invests the proceeds at your direction. Nothing happens anywhere without you logging in and approving it. There's a whole level of security on there we'll go into later. Your money's safe. We have insurance, malpractice insurance, fidelity bonds. There's even an additional bond we can place on each individual trust. I need to emphasize something else. Each trust is a one-off. It's your trust, unique name, unique accounts, unique investments, unique timeline. It's unique to you. There's no commingling, all right? We have a separate program called Iron Gate Holdings, which does purchase properties and give you a 10, 15, or 20-year principal and interest payment stream that is guaranteed and backed by the assets. That's a different program. All right. So we do have solutions for both. All right. So, but what we're talking about here today is an individual installment sale trust, unique to you, unique to your transaction, and at your direction, because it is your collateral, effectively your assets, but indirectly. And that's what allows for the tax deferral. All right. To learn more about how this works, we're going to spend more time talking about it than it takes to fill out the documents. All right. It's actually simple. So we got to get past all your questions so you realize, hey, this is simple. You can reach us at both of these, info@q-1031.com. We'll send you copies of all this. We'll send you the brochures. We will send you a copy of the PowerPoint here. You can call us at 844-636-6312, as you can see here. And we'll actually do a full pro forma report as well. Once you see a full pro forma report, all right, you can order one of those yourself at q-1031.com. You can order a simplified revenue estimator, or if you have your data, if you have your information, you can order a full pro forma report. We will review that with you, with your CPA, attorney, whoever your advisors are. We will review the whole thing with a side-by-side comparison. Now, those pro forma reports are actually done through TurboTax. Those are where the calculations come from. So it's every bit as accurate as the data you provide us. So if you go to Q-1031 and order that report on a property, then we can do a comparison. If you have buildings that are 20 doors and above, we have investors right now. We have investors sitting on dry powder, ready to buy today. All right. So we can help you with that as well. All right. I look forward to helping you. Send us your questions. We will answer all your questions. Go to Q-1031 and order an appointment with us and have a Zoom call with us, and we'll go over your individual situation and answer your questions. You can actually schedule the appointment right there automatically through the calendar. I look forward to helping you. Kevin De Silva is an outstanding realtor. He understands economics, has a degree in economics. He understands what it is we do. He understands these other strategies, and he knows how to line these things up for you to maximize your transaction. Thank you. Good day.